GM. Welcome back to Get Real with Mu Digital. We have made it to episode 6. My name is Patrick, and I'm here with my co-founder and co-host for tonight, Cholo. Today, we continue our founder series. So we brought in a very special guest founder, fellow Monad builder at one of the most well-funded Monad projects backed by Pantera, trader turned Web3 founder, Ray. Ray, welcome. We call this pod Get Real because we want the unfiltered takes on Web3, on what needs to change, and how we are helping to build the future together on chain. So maybe we start from the beginning. Can you tell us about your background and how you found your way into Web3?
Yeah, sure, Patrick. Thanks for having me here. My name is Ray. I started my career as a quant trader at a high-frequency trading firm, and then started getting more and more into crypto. So I started at Flow Traders, started doing a lot of degen stuff on chain. When DeFi summer came around, I just figured couldn't really get sidelined and left TradFi, but still staying in trading when I went to crypto jump trading. So got to see a lot of super innovative projects when I was there. Also contributed to a few really cool crypto projects. And then ultimately just ended up realizing, wow, there are so many opportunities that, still a lot of gaps to be filled in crypto coming from a trading background. So ended up deciding to come out and build aPriori.
Awesome, cool. So we usually have two segments. The first is sort of on the state of DeFi, which I'd like to dive in first before we go to some of the other stuff. But as you mentioned, you've been in the space for multiple cycles, seen a lot of projects and different types of products come and go. What's your read of the current state of the DeFi market?
Yeah, I feel like they are part of the DeFi side of the world that's always like cyclical, right? So it kind of follows the macro trends, rates, geopolitics, all of these things. But I think overall we're at a really good place. So if you look at a lot of the tailwind on the regulatory side of things, those have been largely removed as blockers in the last 6 to 12 months, right? Very recently, SEC also released kind of the new ruling around liquid staking on the ETF side of things. So I think all of these things are just moving us in the right direction. So that's obviously super positive. Now on the other side, on the building side of things, right, we are seeing kind of a small stagnation, if you compare that to DeFi summer back in the day. But I think that part is a little bit reflexive, right? When you have regulatory lack of clarity on the regulatory side, naturally you're going to drive a lot of builders away from this particular vertical in crypto. But nonetheless, I think the builders that have stayed are ones that was strong conviction, ones that just have a dedication to keep building innovative experiments in DeFi in crypto. They're not tourists anymore. So you kind of washed out a lot of the less serious people. You kind of washed out a lot of people that are kind of just trying to hop on a hype train when there's momentum, but haven't really decided to stay here long term. So we're still seeing a lot of interesting stuff that are coming out, noticeably, Hyperliquid in the last like 12 months or so. Bunch of these very interesting experiments that have caught great product market fit are consistently coming out. So overall, yeah, still super excited about DeFi, just like day one.
Yeah, and you made actually an interesting point because you mentioned it from the builder side that there were a lot of things that were tried in the past, and maybe it was a little bit easier to, I would say, certain practices lasted for a cycle or so until everything blew up like very publicly. And it's reflected in DeFi TVL on the demand side, from coming from whether it's retail or insties. I'd say it's high watermark in DeFi somewhere. We're probably somewhere around 180 billion, in TVL. We're still not there, So as you look at, the market as a whole, it is on the uptick, from where it was after the crypto winter, but we're still not even where we were in 2021. What's your view? I mean, do you think that with some of these new paradigms, platforms, products, are we on the upswing? Is there a shift in sentiment? How do you see in the short term where this goes?
Yeah, I think like obviously interest rate is a big part of it, right? Like interest rate combined with a super hot equity market, the opportunity cost of parking some capital on chain is just a lot higher than what you would have, around DeFi summer. But kind of following up on that, right? A corollary to that is that if you look at TVL as a pure metric, I personally believe a big part of it is a vanity metric, right? It loses a lot of nuances on what's actually happening behind the scene. It's not about how much value is locked. It's more about how much value can be extracted from these capital, right? So how much value is the capital actually occurring while parked on chain, right? So when you look at that, I think the world has changed drastically compared to DeFi summer, right? If you look at the DeFi primitive side of things, AMMs have become a lot more efficient, right? Like compared to where we were. Now you have concentrated liquidity. Now you have all kinds of other primitives, private liquidity pools that are getting spin up on Solana, and that's something that aPriori is working to enable as well. If you look at trading activity, right, like pure trading activity, not just your typical park it there for POSEL and looping opportunities. If you look at pure trading opportunities, that have also increased dramatically compared with where. So just looking at TVL, I think misses a lot of pieces of the story. The other side of it, I will say, is that sustainable growth is always better than just a crazy uptick in the chart, right? When we are seeing a steady growth of capital moving on chain, that's just a lot healthier indicator than a bunch of people whales FOMOing and park their debt TVL on ecosystem, but don't end up doing anything.
Yeah, no,
I mean,
definitely. Yeah, sorry, you go, Cholo.
yeah, I guess the one question I had was on the DeFi point. I think it's interesting. Like you made a point of regulatory clarity. I guess does that have an effect in terms of the creativity of founders? I guess I'm coming at this from like when you looked at like 2017, 2018. A lot of the kind of like very, I would say like very kind of like bellwether protocols now essentially emerged out of regulatory arbitrage. You think about Uniswap. You think about some of these things where you couldn't do certain things because crypto was kind of like that unloved child of finance, and you kind of saw this like Cambrian explosion of just like cool things in DeFi. And does that mean that with regulatory clarity, does the value capture move back to traditional regulated institutions, guys with like distribution advantages like Robinhood has recently come into the space? Does that make it harder for founders? What do you think? As like someone who has been on the trading side, also the builder side over the last couple of years.
Yeah, this is a great question. I think it doesn't make it harder for founders, but it definitely kind of push crypto projects into more of a dichotomy. This is kind of my personal take. I believe that, especially when we're talking about trading related protocols, I believe that in the next 2 or 5 years, maybe it'll come even faster than we think, but in the next 2 or 5 years, you're either going to have things that are completely censorship resistant, right? Completely decentralized, or you're going to have projects that are completely compliant, meaning getting all the licenses done, fully compliant with every jurisdiction that you are operating under. I don't think you're going to see anything in between. So this is my personal belief. This might be kind of a hot take because I think still a lot of crypto, probably a lot of like the industry probably believe that it's important to find your product market fit first and then decentralize later. That might not be wrong, but I just don't think in the future you still get to pick your kind of sweet spot on the spectrum of decentralization. And the reason behind that is just like super clear, right? Like previously it was kind of unwillingness to regulate, right? Like there were a lot of resistance in terms of like, okay, let's just keep crypto in this kind of a vague, ambiguous state, and then we can kind of regulate it however we want. But now I think regulators are catching up, and sometimes regulators are slow, but they're definitely not stupid. It's the only way to kind of push through and still maintain a lot of the great product strengths that crypto offers is just by fully decentralized and censorship resistance. There's no there's kind of no shortcut around this thing.
Yeah, I'd love to dive into this topic. This is something that's near and dear to our hearts, because we play in RWA where essentially a lot of the securities that are coming on chain, a lot of the products that are coming on chain start as securities. And then you try to overlay this decentralization layer, which depending on where you sit in the world can be easier or harder. I know that you're currently sitting in New York, so why don't we talk about the US framework, because it is one of the most important globally as far as all financial markets go, whether it's crypto, digital assets, or traditional markets. Is it a good thing or is it a bad thing that the institutions are at the gate, and are they going to take away everything that we've been building since 2009?
Yeah, I don't think they're going to take away things that are building since like 2019. Like, I think there are a lot of primitives that are just harder for institutions to catch up, right? For example, right, like pump fund. These people say what you will about like meme coin frenzy. The innovation around asset issuance on chain, and now we're seeing price discovery happening on chain first and then centralized exchanges later. That is just like a crazy it's a crazy thing, right? Like, if you really think about it, like assets are getting created and issued on chain. That is something institutions can't take away. If you think about settlement and clearing and all of these things, right? You have global settlement network that can settle trades within like a block. That's something that is just really hard for institutions to catch up, especially when we're talking about a permissionless environment, right? If you talk about like onboarding users like globally, especially when you're looking at access of liquidity, that is something that institutions just can't compete. But I will say though, there are a lot of things that institutions are really good at that crypto native projects probably need to just compete a little bit harder, right? Obviously, like the elephant in the room, if you look at what Robinhood has been doing, if you look at other players like Stripe, and so to speak, they're going to bring like a lot of firepower to crypto. They're going to bring a lot of users to crypto. If they could abstract away a lot of the products and just simply by offering a better UI UX embedded in what their existing experience is, that's going to be a really powerful move. But I don't think I think like crypto, a lot of people think of it as like some very zero-sum game. I always get excited when new players enter kind of the arena and end up making the pie a lot bigger. In my opinion, a zero-sum game is pretty stupid. It's really hard to fight for an additional 20% market share, but it's a lot easier when you get like huge juggernauts coming in and just simply make the entire audience 10 or 20% larger, and that's also a lot more interesting.
One of the things that we talked about on the last pod was we should all bring back the term WAGMI. For those that don't know, last cycle, we're all going to make it together. And that is exactly what our sentiment is as well. But just on that last part to the instances, Cholo, I'd love your take here for those of Cholo has some experience working with the Singapore tokenization agent, or the one backed by the exchange here in Singapore. So what's your perspective on sort of instances entering the fray and how competitive they're going to be versus like DeFi native, crypto native players?
I think one of the things that people underestimate, and I think Ray can probably comment on this, is just the ability of TradFi to price and manage risk is unparalleled. It's basically what they've been doing for decades and decades. And I think when they look at crypto, they think that's child's play, essentially. And I think that's been the biggest impediment, I would say, for most TradFi, both asset issuers, but also kind of like platforms in terms of coming into crypto. Liquidity is still quite fragmented. Price discovery is still very, very weird and very kind of like funky in that sense. And I think as a TradFi institution, we're moving kind of like yards and yards of volume a day. Like, you can't underwrite some of the risks that crypto has, just fundamentally. Like, smart contract risk is one, but also kind of just like how the volatility is kind of like also very unpredictable. But I would say that if TradFi does come in size, it will level up crypto. It will it will basically mean the easy money is gone. Like, when TradFi comes in, like the big trading houses, they come in, these are like very sharky houses, and they will essentially arb away and trade away all of the fat in crypto. And I think that's going to be very exciting. It's going to be very important from an asset issuer standpoint, from a tokenization player, Like if you want true capital formation for large corporates, non-crypto companies on chain, they need to have this comfort that I'm going to come in, my deal's going to get priced properly, it's going to trade properly, and there's going to be an active secondary market in the space for it to be able to kind of like live in the same settlement timeframes that crypto has, which is atomic and almost instant. That's going to take time, but I think it's very encouraging to see all these like big houses, big banks, big trading firms starting to dip their toes, and then once they come in and once they kind of like get comfortable in the space that they're operating in, then they can bring a huge balance sheet to kind of make it essentially bring to bear all of the tips and the tricks that they've built up over the decades, and bring really level up the way that risk is priced on chain, which I think is a big unlock.
Anything to add to that, Ray?
No, I think that totally makes sense. I think the other thing is when I think about risks, totally. I think if you look at how TradFi prices risk, right? Like you have a whole, it's just like way more robust process. But on the flip side of that, I will say that on the DeFi infrastructure, especially on chain, I, as a DeFi user, I personally actually feel a lot safer keeping my money on Aave than in a bank. And I think this has been kind of an interesting change that I kind of caught myself, just like feeling that in the last year or two, right? When you look at, bank failures actually happen way more often than you think. And the kind of the long tail risk, the black swan event actually is a lot more, just a lot more frequent with a higher probability than most people would estimate. However, Aave, and that's the beauty of open source, software and smart contracts, right? If you are an open sourced protocol out there with billions of dollars stake on you, and you're just kind of wide out in the open, and for years, no one's able to exploit you. Given how battle tested you are, right off the bat, I think the smart contract risk actually decreases exponentially. So that's one thing. I think smart contract risk is something that decreases exponentially. It has a crazy amount of decay, especially after a certain time period. It's just like almost impossible to think about the probability of like a protocol like Aave actually getting exploited at this point in time, right? Because so many probably have tried and failed. However, once you get past that point, and now you have the transparency and the censorship resistance in place, that becomes a really, really powerful thing, right? That is something that's like cross-border. That is something complete permissionless, and that is something I would argue actually has like a lower risk than putting your money on one of the smaller banks in the world. Now, the difficult thing is how to build like brand awareness of trust and onboard new users onto this thing, how to give them the assets that they care about when they are using these DeFi primitives. But that is kind of a different topic. I just thought it was interesting to share. Yeah.
No, I mean, for sure. And I think, Cholo, you go before I change topics.
So I think one last thing I would add here is like, I think Ray's absolutely right. I think it's interesting, like when you think about in TradFi, you think about yields as essentially an equivalent to risk. And there have been many times this year that actually the Aave deposit yield is actually lower than treasuries. So it's interesting that when you think about it, that actually people think that this decentralized protocol is less risky than treasuries, than the US government. Of course, the volumes are much different. It would be interesting to see, like, as DeFi and TradFi converge and this scales, are we going to see on-chain yields being tighter than some of these like risk-free rates we see off-chain? And I think that just goes to show, well, to Ray's point, because it's smart contracts, there's no counterparty risk. It is really pure kind of like market risk in that sense. And it's kind of like a very interesting dynamic to see play out in real time.
So that being said, I mean, sticking with, different DeFi primitives, Ray, you mentioned before that, there are some interesting new products that are being launched in this cycle. What do you think is missing in this cycle, and how has that led you to? I saw that you just released your last new product. Like how has that influenced what you're building yourself at aPriori?
Yeah, for us, when we look at just DeFi as a whole, right? Like I think we always like look for interesting lessons that we can take from TradFi and just like apply it directly in DeFi. I do think order flow is still a largely unoptimized vertical in DeFi. And the way we think about it is actually like pretty straightforward, right? If you look at traditional centralized exchanges on equity markets, and even if you look at like brokerages like Robinhood, right? Order flow is always properly segmented, kind of labeled, and different tiers of order flow has just different value, and everybody understands this pretty well, right? I think Robinhood was selling its order flow for like hundreds of millions of dollars, and this happens on every single exchange through payment for order flow. But that is something you just can't really do, or you couldn't really have done much on DeFi. And I think the reason behind that is a few things. Number one is when you look at most of the chains, the performance is still quite not there. So if you look at Ethereum, obviously the block time is just a lot longer, and the gas is really intensive. What this means is even if we could classify these order flow within the block, it's pretty expensive for liquidity providers to kind of update their quotes, their resting orders. So that has been a pretty big constraint, right? So that is something that we think Monad is like a super exciting solution that could come in and fix that and just make market making a lot more capital efficient. The other thing it has been, if you look at where the juiciest order flow is happening, right? That is going to be Solana. However, if you look at Solana, unfortunately, a lot of the smart contracts are just closed sourced. So while you have a lot of interesting, juicy transaction data, it's a lot harder to extract insight from these data. So that's where we believe Monad also come in, right? So when you have a completely EVM compatible environment, you do bring in the same kind of protocols with the same open source culture along with them. So that's where aPriori kind of comes in. We are running a huge, kind of a mission to collect a lot of the wallet data, right? What we do is we look at your entire on-chain transaction history. We measure how well you have done trading against different pools. We try to understand how toxic your order is, right? And if it's toxic, what's the markup period? Is it toxic over a 1 second period, or is it toxic over a longer kind of a medium to shorter frequency? So these are a lot of the work that we're doing behind the scene. And I always think about when we are trying to push our product, we're trying to like sell the experience, not the product. So what that means for the users of aPriori is that if you are not a hedge fund, if you are not an arbitrager, if you are just a regular person that are trying to make a swap, right? Maybe it's on the stable pairs, maybe you're looking to ape some meme coins. If you are not someone that's looking to arb 40 bips, 20 bips here and there, then we should just give you a price that could almost compare to centralized exchange. The market makers should feel very comfortable, filling you all the way up to the best prices possible, knowing that you're not here to hurt them, knowing that you're not here to arbitrage them, knowing that you are part of an organic volume that's coming in buying this particular token. So that is the work that we have been working really hard behind the scene. I think we think that we're very well positioned product wise, right? Like we're building out the MEV powered liquid staking on Monad, and a natural extension is to vertically integrate not just on the back end of where order flow is happening, but also going directly close to the users and start optimizing on the order flow side of things as much as we could, even on the front end.
That's awesome. Are you going to be live with this project or with this product on day one?
Yeah, we're definitely going to be there. Yeah.
Nice. Cholo, anything on this one?
No, I think it's yeah. I guess most users actually don't think about like this thing when they swap on Uniswap. I think they just, with crypto, it's kind of just been embedded into our kind of workflow or like kind of mindset that yeah, sure, when Ethereum's busy, then yeah, I'm gonna pay 2% slippage, and that's just okay. Like that's just the state of the chain. That's just like a given. But it doesn't have to be that way. Like you can be more. You can get a better experience if you kind of optimize some of these things. And most users don't think about it, and they definitely think less about it in terms of kind of like on low gas chains. And I think that most people conflate kind of gas as the only transaction cost you do when doing stuff on chain. But actually, if you're swapping, then actually execution cost is the how much kind of spread you make you pay between the mid is actually a bigger component, especially in low gas chains. And yeah, I mean, it's if you can optimize that, you create a lot of I guess you unlock a lot of economic value for users that are not just here to kind of play the order books.
Yeah, and the beautiful thing about having blockchain as a settlement layer is that traditionally in TradFi, and what you end up seeing is that the value of this order flow ends up going to either the brokerage themselves or the market makers, depending on how you look at it, right? So when you have these like juicy order flow, the trading venues will be selling this order flow, and the market makers will be paying all the way up to theoretically up to how much they can extract from this order flow. Where blockchain comes in is actually that value is given directly kind of back to the users, right? So instead of some trading venue that's like selling your order flow, what ends up happening here is if we could just mark you as non-toxic, makers are happily to come up all the way to kind of meet you somewhere in the middle, right? So they can also increase their market share on chain as well. And I think this is always something that keeps us excited, is that, look, can we take something that has worked really well in TradFi, given our trading background in HFT, building trading infrastructure and everything, and we take something that we learned from that world and put it in blockchain world, but it actually ends up working better for the users, end up having more democratization on just like a global economy participating. That is something that really excites us.
For sure. I mean, that's something that's one of our key tenets is, it's almost like sometimes, Web3 and DeFi is trying to reinvent the finance system when there's so much innovation that already exists in TradFi. It just hasn't come over yet. Now it's starting to come over. And especially you look at our space, RWA, all different types of assets are starting to come over. But to your point, you have to innovate on top of it. It can't just be, copy pasta of like, oh, look, there's an asset off chain and now it's tokenized. Like whoop-de-doo, so what? So like, how does blockchain make it better? How is your protocol building on the narrative that TradFi did? Like, I feel like that's what really differentiates now in DeFi products that potentially will have more demand and PMF versus other products which will just get stuck, because the fact of the matter is some things don't need to be on chain. Some things there are behaviors of the people that live on chain which make it better, and some things don't need to be on chain. So I think your point's one that we talk about a lot. It's super interesting to us, but I love what you guys are doing with sort of flow and order books, because it's definitely. I'm a meme coin trader, and sometimes if I want to get into trade, I'm like, I'll take like a 5% slippage. Like I don't care. I just want to get into trade. Right? It shouldn't be that way.
Exactly. Yeah.
So we like talking about different narratives or hot topics right now, and I think there's a couple that we just can't get away from. Digital asset treasuries. So I think, I read a report from Galaxy, and it's probably like a week stale, so the number's probably more now, but there's over like 170 different digital asset treasuries globally, so in different markets. What's your view on sort of this trend? Is it sustainable? Is it a good trade? Would you invest in one? What's your view?
Yeah, look, I never offer any financial advice. Never done anything like that in my entire life. But here's kind of my take on it. I think this is kind of a DAT has been happening for a while now, and recently it kind of entered more kind of the public's eye. But I think this is kind of a natural extension of what happened with Circle, and what everybody's looking at is that clearly there is a huge appetite for crypto-related assets in the public equity market, and that appetite has been grossly underestimated by everybody that's kind of native in crypto. And I think this is also like a great reminder to ourselves, those who have been working in crypto for a long time, to once in a while kind of get out of our own bubble, right? Try to see the world as it is a little bit more, rather than just like projecting. This is sort of almost like a curse of knowledge, right? Like you spend so much time in crypto, you become naturally a little bit more cynical, might be not the right word, but you're a little bit more critical of like everything you see. But it turns out, yes, there's like a huge appetite in the public market for crypto assets, which I think is a great thing. That means still a lot of people in this world believe that they are very much under allocated in crypto assets. That is one thing. The other thing I will say that I do think there were a lot of like DAT in the chatter. I think earlier on, about a few months ago, it was extremely hot in the primary market, right? It's like very easy to do the financing and everything. Everybody wants in. I do think that market has slowed down a little bit now, right? So now the thing is how soon that will trickle back to and it's reflected in the equity market. That is yet to be seen. But I do feel like it's kind of tapered off a little bit as a trick. Yeah.
Cholo, you still hearing about these trades over here in Asia?
Yeah, I mean, I've heard of a couple of they're trying to do like all like in many countries like Korea, Japan, Thailand. It's a theme, I guess. Like to Ray's point, I think a lot of like people in crypto underestimate the desire of people outside of crypto to get exposure to whether it's Bitcoin, Ripple, Dogecoin, whatever, Ethereum, and they also underestimate the willingness of people that are not in crypto to actually go through the process of actually buying and owning like Bitcoin or ETH. And it's hard for people who are not kind of like savvy, who are not kind of in this space, like opening an account in an exchange after you've seen all these like news around FTX and all these failures. There's a recent failure again in Singapore here of another CX. So people are justifiably afraid of getting onto these platforms and putting their cash and buying these assets. But also they're also very comfortable with equity brokerages, with equity like platforms. And if you offer them, especially in these countries where ETFs are not yet a thing, and there's no kind of like ability to access like a discount broker to buy IBIT in the US, it is an opportunity to just get long Bitcoin or long ETH without having to go through the cumbersome process of onboarding into crypto. So people underestimate that, and I think that's where rightly a lot of these platforms are identifying that that's a nascent market that they can access or expand their investor base by just doing a very, I would say, a somewhat simple act of just adding Bitcoin to their treasury. And it's gonna keep coming. And I think the danger with anything that's kind of this frothy is always that people overextend themselves. There are like companies with not so noble intentions that are doing this just for, I would say, very, very selfish reasons, very, very kind of like monetary motivated reasons. A steady market does, it'll self-correct. And I think there's something here that is kind of, you've opened Pandora's box, and I'm going to come back in. So I think just the notion of holding crypto in your treasury as a productive asset, that's not going to go away. And I think that more and more are going to come onto that kind of thinking, and that's just great for the space in the very long term.
Nice. I see we're halfway through the pod. So Ray, I kind of want to switch tacks a little bit. So the other side of what we like to do on these, especially when we get founders like yourself, is talk a little bit about the founder journey. For a little bit of context, part of the reason why I asked Ray to come on the spot is because, we, of course, we met through the Monad ecosystem, but one of the events that I personally find very useful are the founder firesides. And actually, I was in one where I was listening to Ray and all the advice that he had, and there are things that we have put into Mu Digital. So definitely appreciate your take, and would like to dive into a few things here. So, from your perspective, being in the space, being a founder in different circumstances, what's something that people get wrong about being a Web3 founder?
What is something that people get wrong about being a Web3 founder? I think right off the bat is trying to understand the game that you're playing. I think that is something that takes a lot of adjustment compared to wherever that you are working. And that is probably true not just for Web3 founders, but founders all around the world, right? Crypto is a very hard, playing field for a founder to build something. If you look at most of the protocols, almost all of them fail somewhere along their journey. So if you are a serious founder, if you are in it for trying to build something in the next 5 years to a decade, it's very important to understand what game that you're trying to play. And at different stage of your founder journey of the stages of your company, you're playing different games as well, right? Like right off the bat, you're trying to cut through a lot of the noises in this industry. And to be honest, like this is an industry that moves incredibly fast in terms of like narratives and everything. But the progress is actually way slower than what people think, right? So how do you balance that? How do you balance building out something that on a daily basis, just building towards something, slowly compounding towards something, while still maintaining relevant to your community, to the larger space. The other thing is, how do you hire the best people, right? I think crypto does have kind of a talent problem, and this is something that personally I feel like the hardest thing about being a founder is simply hiring. At aPriori, we have spent over like 18 months just chasing after one or two talents, trying to consistently convincing them to come and join on board. And I think we like take pride in just consistently attracting the A+ players, and slowly we're getting a group where A+ players would just attract A+ players because they want to work with each other. But if you look at our team, half of the technical folks and many others, I would say, has an opportunity cost of north of $1 million a year, right? So how do we convince these super talented folks to leave their very lucrative careers at traditional finance, high-frequency trading, or very successful technology companies to leave their very great positions and to join us? And kind of a small startup, at the beginning of the journey. All of these things are extremely difficult. And what this means is, as a founder, you can't just be a great founder on one vertical. This is something that just doesn't really work in crypto. You can't just be someone that only cares about product. You can't just be someone that only cares about go-to-market. You have to care about product. You have to care about go-to-market. You have to care about understanding where the capital markets are. You have to know how to do marketing. You have to understand how to fundraise. You have to understand how to build a community. And all of these tasks, right, like including talking to institutions, talking to exchanges, all of these things combined need to, you basically have to cover every single one of them across the founders. And that is just something I think is a very tall ask for a founder or anybody in general. So yeah, these are probably my takeaways. And as you can probably tell, as I'm like monologuing on, I don't really recommend anybody to be a crypto founder unless they have thought really seriously about it. So I welcome more builders, but on the flip side, I do think people need to set the right expectations and try to do some self-assessment before they jump into this industry.
Yeah, and I just want to add something on that. I think one of the interesting things that we've learned in our journey is it's almost like you're playing in the beginning. You are playing two different games in the sense that there's a defined way to be. When I say defined, there's a playbook of how you be successful in a traditional entrepreneurship, like a Silicon Valley based, YC backed. Like this is how Web 2 startups work. Then on the other end of the spectrum, you have things that worked in Web 3 in past cycles. Whether it was DeFi Summer, it was 2017, whatever cycle you started, and there are things that just worked. One, crypto moves very fast, cycle to cycle. What worked in the last cycle probably doesn't work anymore because guess what? Everyone figured it out and then it crashed, right? But at the same time, you have to be able to marry the right things from both parts. There are best practices in Web 2 that work and the best practices in Web 3 that works. I mean, that's the reason why we always say that it's this convergence of, particularly for us in RWA and DeFi, they're financial products, but how do you level up financial products? And the only way you can level up financial product is knowing what was wrong to begin with, and then how can the new thing make it better? So I almost feel like you're playing a handicap game in both ways, because even if you were like a YC founder and your thing worked in Web 2, it probably doesn't work. The same playbook probably doesn't work here either. Yeah.
The key thing is, interesting enough, I love thinking about playbooks. This is something that a huge part of why I enjoy my job is just every day I just try to think about playbooks. I think the one true playbook about being in crypto is simply keep developing new playbooks, and don't hold any advice as kind of a tenant, unchangeable tenant. Things are moving really quickly. Just try to think really first principle, right? And try to sit back a lot and look at the game that you're playing. Has that changed? Has that evolved? And you have to adapt to it, with it, right? It's people probably think of it as like, look, if you have a very strong conviction of building something, you should just keep going in that direction. I think that's true, right? Like if you have you always need a North Star. You want to be very consistent about what you're trying to accomplish. But the problem is, the problem of getting too fixated on the North Star is that the path there, right? The landscape is always changing, right? So as a founder, your job is to figure out how to get to that North Star while like changing like 20 different ways of how you're like moving forward. It's challenging, but I think that's a huge part of the fun as well.
Cholo, you've been a founder in 2 cycles. Before I go to the next question, you have anything you wanted to add there?
I like the playbook comment, and I think that the great thing about crypto is because everything is so interconnected that essentially you can really kind of take playbooks that work in like what I would say kind of very disparate parts of crypto and actually apply it to yourself. So I think one of these things, like when we saw the NFT craze, like NFT NFT projects were very good at building communities, and I would say that a huge part of the playbook around how communities are built nowadays are taking back and harkening back to like how these NFT communities essentially scaled community from 0 to 1 in essentially nothing, no funding, just a bunch of guys and a Discord. And you see how they created these massive communities that is very sticky, and it continues to be very sticky until today. You see kind of like the airdrop meta that started out. I think the most successful one was Blur and also Arbitrum. It's kind of like been kind of co-opted now by essentially every project. Every project now is running a points program, has some form of airdrop. And I think that's the one thing that is great about being a founder in crypto, is that you can take all these various things that work in different parts of crypto and apply it to your specific use case. You don't generally see that in Web 2 so much, because in Web 2, each kind of vertical like fintech is very different from like gaming or different from AI. There's less cross-pollination of ideas. And I think that's what, as a founder of crypto, that's quite interesting and exciting, because you know that because the audience is kind of like has a huge overlap, there is a lot of like transferability of these playbooks and strategies.
Maybe one more just on the founder thing. I'll ask a semi-hard one. So maybe I'll ask it to both Ray and Cholo. What's been your hardest lesson so far?
My hardest lesson so far, I think 2 things. First of all, it's just hiring. I think hiring is a very, very difficult thing to do. Well, we tried many different ways to attract really bright talent. It turns out the best way to do it is just stay very patient. We ended up hiring almost all of our friends from high-frequency trading and very successful Web2 companies. And many of them took 6 months, 1 year, 18 months of convincing for them to join. Like I said, a lot of them, like their opportunity cost is like north of $1 million, and it's just really, really hard to convince them to join. The beauty of it though is it's almost like dating or marriage, right? If it's not a fuck yes, it's kind of a fuck no. The moment these people actually do join you, the moment that these people do give up a high opportunity cost to join you, they become like zealots, right? It shows how much conviction and passion they have in joining your company. So the flip side of that is, while we waited patiently for these people to join, we never negotiated. We never tried to sell them on the job. And I think that's a very important lesson in hiring. You should explain to them about the job. If anything, you should actually tell them all the bad things. And this is what I do now. When I'm hiring someone, I'm interviewing someone, when I'm trying to convince a candidate to join, I actually tell them all the negative things about joining aPriori first, just to get a sense, get a fit. And it's also important to manage expectations when these people are coming in from a much more structured environment, firms that have been around for 10 or 20 or even 30 years, right? So that is like a huge, interesting and very hard lesson to learn as a founder. So I think probably hiring is my my toughest one.
I think for me, it's like paranoia. I think you just have, as a founder, you have to just be in a constant state of paranoia, because even the best laid plans just never come to fruition, right? There's always something that will blow up. So the market may tank. Your employees might leave. Your product's not working. So all these kind of things, you just kind of prepare for the worst. And like the worst feeling as a founder is like when everything's going really well, because you know that there's something that's gonna tip against your favor at some point. So it's just, but it also kind of like builds this kind of like flexibility and this like just nimbleness in terms of thinking on your feet, like, adjusting on a fly, like adjusting plans midway, and that is part of the stress, but it's also, I guess, part of the fun. Like you never know what to expect the next day. But it also kind of takes a toll on like just how you manage your day to day. So I think it's also good to have a good network of like co-founders or a good network of fellow founders in the space, just allies where you can kind of like jam and yap about your difficulties. Your chances are they're probably facing the same thing. So that I think is for any new founder or anyone that wants to found a company in crypto. Build your tribe, build your crew early, because they're going to be very important.
100% to both. Cheers to more fuck yeses from Ray, and cheers to building your tribe on Cholo. That's what we're doing here, the Get Real podcast. So we'll move to the last segment. Ray, if you haven't seen the segment yet, we like to do this with all of our guests, and usually it's Cholo and I getting these questions. So it's the rapid fire round. Fast questions, 5-second responses, no thinking. I'll ask both you and Cholo, so at least you have some time to think.
All right.
So we'll start here.
Okay.
Which rug hurt the most, emotionally or financially?
Financially. Always financially.
What was it?
Can't tell you. If I tell you, it's gonna hurt both financially and emotionally.
Cholo?
Yeah, financially. I think mine was, I thankfully scraped by. I didn't get hit by FTX or Luna, but I did get hit by Zeus. That was rough. I essentially top blasted that thing, so it was not a pleasant ride.
What's one contrarian crypto view you'll die on a hill for?
This is, I don't know if this is contrarian, but I think it's always better to ask for forgiveness later than seeking permission first. Sometimes you just got to do things.
Mine is proof of stake is the superior consensus mechanism. Sorry, proof of work.
Okay.
I got that wrong. Proof of work is a superior consensus.
Sorry, Keone. Most underrated crypto project right now? Yeah.
aPriori. I think we're criminally underrated.
Can I copy Ray's answer?
Present company excluded.
Oh, okay. I don't know. Bonk. I'm a big meme coin guy, so I think Bonk's underrated.
Nice.
Yeah, I would probably say Bonk as well. I really love Bonk. I think they just have done everything right. They strike an amazing balance between both being like very careful about expanding their businesses. They are probably one of the more rigorous teams I know out there in terms of like strategically thinking about planning out their business initiatives. At the same time, they're able to create such a fun, inclusive, strong community. These are two very hard things to do at the same time.
I just like their bouncy boxing rings that they had at Solana. It was a breakout last year. The one at Token. Next question: best Web3 founder.
Ooh.
Present company not excluded.
Yeah, I think this one's hard. I like to think there are really good founders. They're like your favorite founders, and there are your favorite founders like favorite founders. I think for me, it will probably be there are a lot of really great founders, by the way. But the two kind of projects that really came to mind are Pendo and Injective. What I really like about these founders is that if you look at a lot of the crypto projects, people become jaded, people become dismayed and frustrated when bear market hits and when the price chart starts to look ugly. But when you look at Pando and when you look at Injective, right, they have just been for a long period of time, they were just like building very quietly in the corners. And I think, and then like eventually it takes off, right? I think that's like every founder's dream. Obviously, every founder would just wish like everything hits and product market fit, everything it just like go to the moon. But if you talk to founders in terms of like who they respect the most, it's those who, you know, have like stuck through both like highs and lows and just consistently you know, building behind the scenes, and eventually their work kind of pays off. I think these two projects are there probably a few like, you know, projects out there that are similar, but these two are immediately what came to my mind.
I mean, I'm 100% agreeing on Pendle. But I think the the one that, I mean, probably I guess everyone kind of like knows by now is Hyperliquid. I think the ability to kind of just like essentially throw out the playbook that every other project has done, including kind of getting VC funding, takes courage in a space, and the ability to actually get the outcome they did without kind of the usual trust anchors or the usual kind of like hype factors that most people ascribe to successful crypto projects is a really masterclass in execution. So I think hats off to them how they pulled that off.
This next question maybe will be linked to the last one, but I hope not. Favorite DeFi project in all of Web3?
I would say aPriori, and let me try to think about a second one. I will say my favorite ones are probably going to be Jito and Jupiter. Two very different kinds of projects. I think Jito is one that's just like technically extremely strong, consistently trying to innovate, and strategically, I think they have also made almost all the right decisions along the way. So they have, you know, shown themselves as someone that's very aligned to the ecosystem. About now, it's coming up about a year ago when they realized, you know, a lot of sandwich attacks are happening, and that could hurt the underlying, you know, environment, blockchain ecosystem that they're trying to build on. They very gracefully sort of give that up and show themselves, like, you know, standing close to trying to like look after the welfare of Solana as a whole. So that just shows like very long-term thinking, very strong strategic thinking on their side. Jupiter is also is kind of different, but I also think they're very similar to Bonk as well, right? They have great vibes, amazing community, but at the same time they have a killer product, right? And they really understand how to execute. They understand how to execute. They understand how to experiment and iterate on a lot of these things. Try out different experiments, and whenever something works really well, they double down. So these are probably my favorite DeFi protocols, and going down the list, right? Like Pando is amazing. Athena is also amazing. I think what Guy and the team thought out like a couple of years ago have been super accurate in terms of like how they mapped out the roadmap and such. Yeah, I actually like that. I could go on and on. There are a lot of super amazing DeFi protocols, and the criteria is actually extremely simple. It's just like who is still alive after all these years. It's kind of in itself a great selection criteria. There is a huge survivor bias here, but yeah, I think not like a lot of people lose for different reasons, but if you look at these winners that are still here, they definitely have won for the right reasons.
I mean, it's a great list. I don't know how. The only one I would add, I agree with 100% of what Ray mentioned. The only one I would add is like Aave. Aave is kind of like that, like really bellwether protocol, all like never been hacked. Essentially has the most TVL out of any DeFi protocol. And I think the great thing about Aave is that they've been around for like what at this point 7 years, and they're still building, they're still shipping stuff. And you see kind of their peers, whether it's like Compound or kind of Curve, that are kind of like stagnating in terms of like rollouts of new features, new products, but Aave is making this push into moving into institutional, which is something that I would say almost no one predicted back in 2018 when they first came on board. So I think it's a great example of just like a team that's committed to continue to build and continue to push DeFi forward.
The next one, I don't mean to tee up Ray again to say aPriori again, but favorite Monad ecosystem project.
I'm gonna do that regardless. I am a shameless shill of whatever we're building. I am the #1 fan, #1 believer in aPriori. But the next thing I will say, it's really difficult, but after giving a hard thought about it, I think it's gonna be Mu Digital. It's very, very.
That's why we brought you on the pod.
I have been,
just so we can meme that.
just so everybody knows, I have been secretly paid behind the scene. This is completely unsponsored, unfiltered take. I don't know. I think for me, there are a few very interesting projects out there. Not necessarily DeFi. I think Opinion Labs is really cool. Prediction market on a very fast performant EVM. That's going to be very interesting. And there's already like a huge amount of interest that's kind of gathered around Opinion Labs as well. I think Nat.fun is also cool. It's kind of a meme coin launchpad on Monad. And it's kind of crazy to see how meme coin could get like so much attention on a testnet. That was just something that was completely, just kind of caught me by surprise. People were literally trying to like trade OTC for like a testnet meme coin with like real money. That just blows my mind. The other ones that I think might be interesting are landing protocols. I think Curvens is doing something quite interesting there. They're building kind of innovative solutions around like liquidation. How can you support higher LTVs and all of that stuff? I think it's really important, especially when we are looking at a chain just with high performance. Now, previously, there might be things that we cannot have unlocked due to high gas fees, congestions, and all of these things. But now when we have Monad, is there something interesting that we could be building there? Narrative is another one that I think is going to be pretty cool. Trading mindshare is something that I think is very important. More in general, I think in crypto, people join crypto, people on board as users because they're just simply looking for more things to trade. They're simply looking for more liquidity. They're simply looking for bigger access to capital, different ways to structure the products. Even if you look at lending protocols, right? Like it's a way to kind of trade yield, fixed income, and such. So these primitives are always something that kind of get me excited.
I think Ray kind of like covered most of it. But of course, first of all, first shout out it's like aPriori. I think great team, great founder. I think great things are in store for that team. But I guess the one maybe or a couple I would add, like I think the club deck space in Monad is very interesting. There's a lot of players. Of course, Kuru is the most known one. I think there's a bunch like Clobber, Purple. I think is also kind of competing in that space, and it will be interesting to see like their take on the technical difficulties and challenges of like building a fully on-chain native order book. Of course, Hyperliquid has led it in a certain approach, so it'll be very interesting to see them go up head to head and like performance-wise and execution. And kind of like fees wise, how that all shakes out for the end user.
And just to add to that, that was a paid plug. Thank you, Clobber, for this hat. This is I'm rocking his merch tonight, but a fun team up there from Korea. So what's up? The last one, we're coming top of the hour. Bitcoin price prediction for 2025.
Anytime you ask me, it's going to be $1 million. I don't care when you ask me over what time horizon, it's gonna be $1 million. But jokes aside, I think Bitcoin is kind of an interesting asset that I think people just have been thinking about it the wrong way. Once again, non-financial advice, right? When you think about statistical distribution, a lot of times people think about, look, if this thing is already so big, right, then it's like the growth potential becomes a little bit smaller. I actually think Bitcoin, along with the AI blue chips companies, are in itself a very different category. It's a different distribution in the sense that the higher it gets, the higher the potential it actually is. It's kind of like a planet in terms of like gravitational pull. Or the other way you can kind of understand it. The way my mental model is, imagine if you are rowing a boat into a body of water, right? And if you have to guess what this body of water is. Is it like a pond? Is it like a river? Is it a lake? You're looking at a very different distribution, meaning the further out you are from the shore, the more likely you are actually like extremely far away from the other end of the shore. So once you row out like an hour, this is definitely not a pond, right? This is more likely a giant lake or potentially an ocean. And this is one of these things that I think Bitcoin and the AI blue chips like NVIDIA, these companies are. The bigger they get, the stronger the potential is, right? Yeah, so I think Bitcoin, and for me in the past, like 2 or 3 years, Bitcoin is like one of the three assets the only three assets that I've had, other than like gas purposes and such.
Yeah, hard to top that 1 million call. My call has always been 300K by the end of the year, but happy to be wrong. Happy to have Ray be right. And at that point, I'll be selling most of my Bitcoin. But I don't know if he's right. I might be making a very bad, very wrong decision.
You heard it here first on the pod. Bitcoin to 1 million. We've reached the end. No, thanks a lot, Ray, for coming on the pod. It's always awesome to chat with you, whether it's virtual or in person. We definitely look forward to the next time we can do this together in person. Congrats on the new product launch. I think it's awesome. Look forward to playing around with that. Any final parting words before we go?
No, look, thank you so much for having me on this. Always happy. It's always a blast talking to you too. Just keep following aPriori for our good progress, and we'll see you out there.
For those of you that it's the first time finding either Mu Digital or aPriori, get out from under the rock, follow us on X, get in our communities, join our wait lists, check it out. Mainnet is around the corner, so all of our products will be live soon. In terms of the pod, stay tuned. We've got some super exciting guest founders lined up in the pipeline. So follow our socials. Thank you for everyone for joining us. Thank you for staying with us for an hour. We leave you. GMU.
Take care.